I'm going to discuss 3 reasons why you fail and the 1 reason that will make you succeed. And a warm welcome to one and all. If this is your first time here, I'm the overgrown child that is the Scruffy Trader. No shop with my toys all over my desk. And what I'm going to do is put trading in the real world. And talking of putting trading in the real world, here's my world. Winkle.
Oh, something's come for you.
Oh, what's that? Oh, oh, something for me as well. Scruffy Trader. So that's me. Whoa. I'll open that in just a sec. Will you get me a knife and whatever?
Oh, yeah, yes.
Good girl. Sorry about that interruption. Looks like we're going to be having a little bit of a box opening in this one as well. But first, let me just tell you why I'm going to do this. Trading is quite difficult at the best of times. Not on the chart. The chart is very easy. You know, and I prove that time and time again. But I'm also very disciplined and I know what I'm looking for. So that makes life a bit simpler for me. Whereas I think a lot of people come into trading and they gamble. So what I'm going to do is I'm going to try and give you something to think about that'll help you in your journey. Because it is not about strategy. Every day I get a message. Oh, just tell me how to get a bias. Tell me how to get in. Tell me how to get out. That is the tip of the iceberg. You have to control yourself first. And this is stemmed from a conversation I was having yesterday. And it's a little salute to David. And I'm genuinely doing this to try and help you. Because I feel from the conversation I had yesterday, this might be your tipping point into sort of seeing, I wasn't going to say error of your ways because it's not error of your ways, but frame your trading in a different light. So yesterday, I mean, I had a bit of merriment and one thing and another. And I put in a few little bits and pieces about range and I was trying to explain the differences between sort of swing trade, day trade, if you like, because they are different animals altogether, but they're based on the same principles of range. Now, there are going to be a lot of people slap me down and say, no, it's not, because I get it in that forum quite regular. And the ones who shout the loudest make nothing. So their voice means nothing to me.
They've done studies, 60% of the time it works every time.
That doesn't make sense.
But within this conversation, you've got good guys like David here. He's genuinely interested in and are trying to be better. And through the conversation, as we were going down, it picked up on something, and I'll just see if I can quickly find it. Builds me up. 20 pips. Might be in this section down here. There we go. This was the comment that caught me. And it was about his need to make 100 to 150 a day, but only off £1 a point. That means you are already at the maximum of what a market is going to give you. And we all know you're very rarely going to hit the top and bottom. You're going to get the bit in the middle. So it's about framing your trades.
Are you serious?
And this is what I'm going to touch on. So I hope this helps, David. I genuinely do. And if you're stuck, you always know where to find me. So let me just flick this back over onto this box because I am quite curious now. And especially because Winky's in a good mood and she brought me a coffee. What are you in a good mood for anyway?
I was in a good mood.
I must be living with me. Or is it because we're on our countdown to holiday?
Not long.
How does your missus put up with you? Must be my legendary prowess as a lover.
See her eyes light up there. She wrote that on that, you know. She write minx.
I did not bring that in my writing.
Am I going to have a good holiday? And talking of holidays, the travelling stormtrooper's coming with us. The poll ends today, and it's pretty tight between Stormy and Shitshot. But Stormy has the edge, so his full name might be Stormy Shitshot. For no other reason, I want to see her shout that across the restaurant going, "Get Shitshot!" Right, let's have a wee look, see what this is. Well, I've got no idea who sent this, so thank you very much before we start. Try and do this without cutting my fingers off. Please God, no. Please God. You're not going to believe it. It's a bloody green Lamborghini. Hey! But it's got my name on it. Scruffy. Hey, how good is that?
Good job.
Oh, that's superb, that actually. That's the only green Lamborghini you should get when it's a model format. If you want a real car, it has to be Jaguar, Mercedes or a Range Rover. There you go, my love. Actually, you can fit that over there. Let's see who this is. Right. Okay. I think this is from the people who own the Etsy store, because it says, "Check our Etsy store. Regards, Peter and Ellen." But thank you, whoever if you are Peter and Ellen, amazing. But I've actually got no idea who this is. Is there anything else in there?
No.
Sorry, don't know who it's from, but fantastic. Thank you very much. Another toy for the edition. This desk is littered with toys, and I love them. Absolutely love them. They're all up the walls now as well. Well, you'll see that in a minute. Right, let me jump onto the board, and I'll talk serious with you.
Well, we're waiting.
Need your coffee, boys and girls. Need your coffee. And why? Get the old brain lubricated. And I need it today because I'm going to discuss 3 reasons you lose money in the markets and 1 reason that will help you succeed in the markets. Now, the first one is quite a controversial way of looking at it, because I'm a big believer in it takes money to make money. Why? Because I come from a business background and I understand that. It's all about your capitalization and how well you can use those funds to reinvest or invest in the first place to grow. So your first one is the fund itself. So why does that make you lose? Well, there's a number of reasons. If you've got a small micro account, you might over-egg it. In other words, you put a position on that's way too big for the size of the account. And it doesn't take long for 1-2 losses, game over. So you have no capital, so you can't trade. If you can't trade, you are losing. It's that simple. But also, it doesn't give you the ability to scale into a trade and get yourself out of trouble or ride a hotspot. So your fund has a lot to do with how much money you're going to make. And if you've only got a micro account, you've got to be pretty cock on all the time. You have no room for error. And because most sort of beginner traders start with a small account, the odds are against them before they start. So best advice, if you are only on 100 to 200, don't be looking for big figures. 10 pence And if you get £1 at the end of the day, that is a fantastic return on a 10p investment. Don't swing to double your account. And that kind of reads over into the next two. Certainly the last one, which is the number one reason that you lose. But the second one, which is tied to this as well, is overtrade. That's a biggie. In fact, it's probably one of the biggest ones out there, because you get caught in the euphoria of trading. And especially if you've had a decent win, you know, suddenly you saw something rattle away out of the ordinary and it gave you a big return. Well, that big return makes you excited. And when you're excited, you don't think straight. You go straight back to market. And what you try and do, and I've seen it, is you've seen the move go up, and your bias might have been up for the day. You've got your 30 pips, and you think, fantastic, I'm the king of the universe. I've just got 30 pips. You know, and if you're on £5 a point, that is quite a bit. You know, that'll do you quite well for the day. If you're on £1 a point, it's 30 quid. 30 quid more than you had. But what do? You've seen the stall point where it came to, and you try to be Billy Big Bollocks and trade that way as well. So you're trying to trade it going up, and then you're trying to trade it going down. Well, if you've already worked out the bias is going up, what merry planet are you living on going against it? But Billy Big Bollocks will have a go. And what happens? They lose their money.
No way!
Very, very simple. And that sort of segues straight into the number one reason you lose money. And I see this over and over. And you also hear me talk about it over and over. Number one, on the hit board, is you gamble. You're not trading at all. You're just gambling the market, taking a punt. Whoa, the market's going, I'm going to get in. You might hit lucky, so you think, whoa, I'm off on it again. Your overtrading kicks in. That one smacks you in the balls. And then your fund can't take it. Game over. They are the three main reasons that you fail. And trying to get that across is very difficult, especially the funding start. If you're starting a business, it takes money to make money. You're not going to open up a shop with 100 quid. It's just not happening. You know, you've got to stock the thing. You've got to put fittings into it. You've got to pay for utility bills, all of that. Trading is the same. Now, your costs could be obviously your computer. So there's a startup cost. You know, if you are going down the route of education, whether you're buying books or you're getting sort of some form of mentorship or something like that, that costs money. But no, what you do is you keep funneling money into an account, burning through it because you're gambling and overtrading. Whereas if you probably spent 200 quid talking to somebody before you start, then put 500 quid into an account, you might have a fighting chance. But if you just go, oh, I'm going to drop 200 quid in the account, oh, I've blown it. I'll drop another 200 quid in the account, oh, I've blown it. You'll just be on that treadmill for years and you'll never get anywhere. And it's like if you have a mad scheme where, well, if I build this account up, I can copy it into this account and then I'll copy it into that account. Again, it's freaking la la land. You know, treat it as a business. Treat it sensibly and you'll be fine. And that brings me on to the number one reason, I'll rub this off, how you will succeed. And then I'll show you a little bit as to why it works. It is less is more. Now you're upset. What do you mean, Scruff? I don't have to trade as much. Are you out of your mind? No, I'm actually right in my mind. I trade once, twice a day. The markets pay me in excess of 30 grand a year. I assure you that. And that's my basic. I get a hell of a lot more than that through the bonuses, which is the money on top of that. And why? Because I stick to that principle. Less is more. So how does that translate over into the markets? Well, we'll take David's point. He was looking for 100 to 150 off a pound. So that means the market itself has to move 150 pips just to break even for him. Well, in that scenario, you're stretching the boat out. You know, you're really stretching the boat out. Let me explain. Now, if you're day trading, you're looking at the last 24 hours. Right? And what are you looking for within that 24 hours? Well, you're actually looking for a range, an ATR, the average ATR for a day. Now, a reasonable market might be 100. You know, cable, Euro dollar, pound JPY. They're in and around, sort of might be 80 to 120, but 100's a good benchmark. The DAX can run up to about 150. At the minute, it's running about 2. But it's at the outer extreme. So if you can imagine that that is the start of the market and that is the end of the market, because on the point of entering the market, if it never looked back and it's 80 yards 100, it's a reasonable expectation it's going to move from that point to that point. Reasonable. Okay. If it dips down, you might only get about halfway and halfway there. So the 100 is contained down here. So again, you've got to be a bit careful with your trades. Pivots can help you with that. But what am I driving at? Well, we know that you can't really time the bottom and time the top. And if you think you can, crack on. You know, more power to you. But inevitably it doesn't happen, because just when you think it's at the bottom, the market will move, spike down, and then come back. So timing it is really difficult. And that's where where tight stops come into it. Because again, tight stops, death by 1,000 cuts. And actually a little salute to Carol in the Discord who asked about tight stops, 1,000 cuts. And said, how do you know where to place a stop? Well, the answer to that is structure. 2 structure points. Why? Because it'll test one, and if it goes to the second one, you're probably wrong. So that is a stop. There's no set criteria for stops. You can't just say, well, I'm 10 pips stop fixed. Good luck with that one. Death by 1,000 cuts. Stop has to be where a stop has to be. In other words, hidden in a safe, logical place. But I'll touch on that in the Discord for you guys, so don't worry about that. But let me get back to what I'm talking about here. So we know we've got a range of 100. And we know we can't catch the bottom. And we know we can't catch the top. So, rule of 3, break it up. So you use that zone to get in, and you use that zone to get out. So what's that? It means you've got 33 pips to figure out how to get in. You've got 33 pips to figure out how to get out. And your profit is the bit in the middle. So if you target 33, you're onto a winner. So if you get in at the last point and it goes 33, gets out at the first point, you've done your job. if you get in down here and it moves 33 to there, you've done the same, but you haven't worked as hard. So I hope that makes sense. I genuinely do. The idea of this video, it's really just to get you to put your thinking cap on and think logically about your trades and how you're going to assess your trades.
Isn't that logical?
So start at the ATR daily, break it up into 3, and that'll give you a reasonable target. Then you're looking for a pocket of air between 2 levels, and you see if it's going to fit. Now, if we can only get halfway and it's going to hit a level, there's a fair chance it can bounce. So do it twice and you still end up with the same pip count. And once you've hit that pip count, just stop. Do it again tomorrow. Now, if you're swing trading, you do the same principle, but you base it across a week because you're expecting your trade to run 3 to 5 days. So if you look at a week's range, again, it can help you with your targets. Simple stuff, guys. An easy way to think things out and an easy way to manage your trades. So I cherish your thoughts as always. Drop them in the comments. I answer every single one, as I do everybody who emails or messages me. And if you want the contact details, go down in the description. You'll find all my details there. You'll also find recommended brokers that I use, like BlackBull, and also a 5% discount off the prop firm, the 5%ers. And if you watch the videos, you'll see the live statements and how much money they pay me, so you know what I'm doing is legit. So as always, guys, trade well, keep your risk managed, don't gamble, do what you love, and the money will follow. See you all in the next one.